Welcome to the special broadcast. The war in Iran continues, although it seems like the most devastating phase of it seems to be behind us. There is hope for some kind of a breakthrough between the United States and Iran. Oil prices are reflecting that. They've now come down to under $80 a barrel. There's also the bigger question of AI. Tech companies have invested cumulatively more than $700 billion just this year alone in building AI infrastructure, and that's expected to go upwards of $1 trillion as we approach 2027. Where does India stand, and what are the biggest macroeconomic risks as far as India is concerned, both internal as well as external? I'm joined by two very special guests. Mr. Arthur Laffer is one of the most renowned economists in the world. He's now joining us on this broadcast. And Mr. Nilesh Shah is Managing Director with Kotak Mahindra Asset Management and part of the Prime Minister's Economic Advisory Council. Professor Laffer, thank you very much for joining us. I want to start off with the whole Iran war situation. We've seen this before as well. There was a ceasefire that lasted for about a month and a half, and then the war restarted. Now, again, there seems to be a little bit of hope that there will be some kind of understanding between America and Iran. Oil prices have declined substantially from the highs that we saw back in April. How confident are you that both economically and geopolitically, the worst of this Iran war is behind us?
Well, on the geopolitically, I can't. I'm an economist. I don't know what's going on in the geopolitical frame. But what I do know is that oil prices will be coming down sharply at some point in time. I don't know how far into the future it will be, but the Straits of Hormuz will open. When they do, oil prices will be settling down. And I'm going to use U.S. dollars as the example here. Oil prices will be settling, I think, well below $60 a barrel. And we have had decontrol here in the United States, so we've seen a huge increase in production in the U.S. Once the Middle East opens up and allows those supplies to come on market, there will be a huge supply onto the market, much as it was under Reagan, and you will see just how sharply oil prices will fall. They will fall a lot. A year from now, we will have nothing like these prices, believe me.
But one thing that's fundamentally changed is control of the Strait of Hormuz. Before this war began, over 100 commercial tankers were passing through the Strait of Hormuz every single day. Now, studies have shown over the last 3 months, if you were to average it out, it's in single digits, the number of commercial tankers that are passing through the Strait of Hormuz. Why do you believe that will fundamentally change once this war ends? Because the feeling is that Iran wants to charge a toll, you can call it by whatever name you want to call it, and that is going to be a permanent sort of fallout of this war, and that's going to have ramifications not just for oil prices, but for other commodities as well.
Well, that may do it, and that means it will fall by less. But there's clearly going to be more than single-digit ships going through the Straits of Hormuz. There'll be a lot more than that. It may not be as high as 100 as it was before, but there will be a lot more flowing through the Straits of Hormuz than are going through right now. And with that increase in the supplies under the marketplace and the U.S. increase in production, and probably other places as well, you're going to see an enormous drop in the price of oil. Now, how far down it goes, I'm very optimistic it'll go very far down, but I've been wrong several times in my life. I won't admit when, but seriously, it's going to go down a lot.
So, Nilesh Shah, if this is the outlook that Mr. Laffer has as far as oil is concerned, it might come down to $60 a barrel or less. Then how does that change the outlook, Mr. Shah, as far as India is concerned? You have warned previously that the biggest external shock for India would be oil prices at $100 a barrel. We're right now looking at less than $80 a barrel. Does this better the outlook for growth as well as other macroeconomic indicators? On Wednesday, the 5th of August, the RBI put out its policy, and it has kept the repo rates same at 5.25. But the outlook for growth for India, Mr. Shah, has been increased by 1/10 of a percentage point from 6.6 to 6.7. Would you be more optimistic than that, or are there other headwinds that we should be worried about?
Oil is one of the largest import, and undoubtedly higher oil prices impacts our economy in many manner. Current account deficit goes up, rupee is under pressure. Government sometimes pass the higher oil prices to consumer, inflation goes higher. As current account deficit widens, GDP growth suffers. So overall, lower oil prices, India is a net beneficiary. higher oil prices, India is a net loser. The RBI for the rest of FY27, looking at how well we have handled the Middle Eastern crisis, where inflation has risen but still well below RBI's comfort level or the upper target range. GDP growth has slowed down a little, but from higher base of last year. So their revision of growth marginally higher is in line with the trends we have seen in the first quarter. For India, the challenge is not 1 year's growth. It is, can we sustain it for multiple years or probably decades, like what China did? And the necessary reforms which India has to do, whether it's land acquisition reforms, labor reforms, some of the capital mobilization reforms, that we are doing, but doing when we are in crisis. So in my opinion, India will be mid-single digit growth economy for years to come. But if we aspire to take it to double digit like China did at the beginning of this century, it will require some tough reforms.
Okay. Professor Laffer, I want to come back to this big thing that has, really, the markets have rallied in a big way over the last 6 months, maybe a year or so, and that is artificial intelligence. Tech companies, by some studies, have invested close to $700 billion in 2026 alone, investing in AI. This week, the S&P 500 hit a record high. There are also concerns that, at some point, investors will start pulling back. The scale of transformation of AI may not be as much as anticipated, or this could be an overheated bubble. We're seeing, for example, in South Korea, stocks, particularly tech stocks, have come off their highs from earlier this year. Some are down by as much as 40%. Is AI, what's the view on AI? Is it a fundamentally transformational technology, or is it also an overheated investment, and eventually investors will pull back and realize the full value or the fair value of AI?
Yeah, I wouldn't look to me for advice as to how stocks are going to go on AI or anything, but let me just say it's a huge reduction in the costs of producing final output. You now can go to a computer screen and get the whole database of everything in a split second, and it really does reduce a lot of the costs of final production of goods and services. It's a huge technology gain, and that will be productivity gains across the board and a much greater prosperity for the world. Now, we've seen other technologies like this come about over time. Railroads back in the 19th century, all of this stuff, and they've all added greatly to world economic growth and prosperity. And I think AI is right in line with all of those. The way I look at the long-term position is it's not AI that has done this. It has really been the fiscal, tax, monetary policy, regulatory policy background that has allowed AI to exist and to be coming into the marketplace. And I'm just very, very excited. At 85 years old, I've never been more optimistic than I am today about the world economy. It's just spectacular. I just hope I live to be 150 so I can see all the wonderful ramifications of these new technologies.
Mr. Shah, as far as India and the AI picture is concerned, of course, there is an effort that's been made. The big tech companies are investing in data centers. Google's announced a massive $15 billion investment, so has Microsoft. But there is a feeling that India is playing catch up as far as AI is concerned. Now, India's growth in software services, software exports over the last 30 years, there's also the question of how much of those jobs are going to be taken away by AI and so on. Where does India fit in this whole AI piece, Mr. Shah?
So undoubtedly for us, IT services is very important. Directly or indirectly, 40 million Indians work in IT-related sector and earns about $350 billion of FX revenue. This is critical for maintaining our trade balance and BOP balance and employment. AI undoubtedly is putting at risk lower end of the jobs, which is, let's say, program writing, coding, program development. Now, for India, in the value chain of AI, there are limited opportunities in some segment and great opportunities in some segment. For example, the beginning is semiconductor chips. with Tata, Micron, and CG coming into play, we have entered the race. The leaders like Taiwan, South Korea, US, Germany, China are far ahead, but at least we have entered the race. The second one comes GPUs, where we are not present, unlikely to be present in days to come. The third segment comes into data center, where we have entered the race. Some companies like Yota have established data centers. More are coming with Google and Meta. Hopefully, we will be catching up in data centers. And since our data consumption is so high, someday other countries' data will also flow into India for storing. And not only we will be exporting data outside. The fourth thing is the AI LLM, the base LLM. While there is Sarvam, which has launched India's own sovereign LLM, it's unlikely to be as good as what is there in the rest of the world. And we don't have trillions of dollars to invest in LLM to make it competitive. So either through luck or through hard work, we find a solution like Chinese AI, DeepSeek, or Moonshot. In absence of that, we'll have to remain behind in this LLM race.
All right.
Finally, there is enterprise AI and app. Over there, India can play an active role. All organizations around the world will require talent to manage data in AI, analyzing, securing, storing. So enterprise AI and app development on others' LLM, that's where India has an opportunity. I hope and pray, like we captured from Y2K to IT services, we capture AI race despite entering late.
All right. We'll leave it at that. Thank you very much for this fascinating conversation, Professor Arthur Laffer and Mr. Nilesh Shah. Thank you for joining us on Times Now.
Thank you.
My pleasure. Thank you.